New year, pause for a moment and be honest with yourself. Do you really know the true financial state of your business? Because if you are only looking at sales, you are already missing the full picture. In the next few minutes, I'll walk you through the simple year-end reflection that every serious business owner, from tech founders to schools, clinics, farms, real estate firms, and e-commerce stores must do. This is how you find the leaks, the wastes, the hidden profits, and the blind spots that are quietly shaping your 2025. Welcome everyone. Let's be honest. Running a business in Nigeria this year has been a mix of wins, losses, surprises, and hard lessons. Before you step into the new year, there is one thing you must do. Pause and reflect on your numbers. Today, I'd like to walk you through a simple, practical process to review your finances in a way that helps you make smarter decisions, clean up mistakes, and start the new year with clarity. So let's first of all discuss why year-end financial reflection matters. Why year-end financial reflection matters. Most business owners plan for the new year without looking back at what really happened, and that is where the trouble starts. If you don't understand the patterns behind your revenue, expenses, and cash flow, you are basically planning blindly. Whether you are running a tech startup, an e-commerce branch, a clinic, school, farm, real estate project, or a professional firm, your numbers always reveal the truth. Let's just go through the areas you need to reflect on before December ends. Let's look at checkpoint number 1. Revenue review. Start with your revenue. Don't just look at the total amount. Break it down. Which products or services brought the most income? Which ones dragged you down? Which months performed well? Which channels or platforms drove sales? Is it social media, referrals, walk-ins, or online ads? This helps you see what to double down on, what to redesign, and of course, what to drop. Checkpoint number 2, expense analysis. Next, look at your expenses. Many businesses bleed money without knowing. Ask yourself, which expenses were essential? Which ones were wasteful? Which suppliers are overcharging you? Which subscriptions, tools, or staff costs didn't produce results? You need to cut the fat. Strengthen the essentials. Negotiate better deals. You can't improve your cash flow without doing this. Checkpoint number 3, profitability review. Now, connect revenue and expenses to see the real picture. Profitability. A lot of businesses made good sales this year, but had very thin profits. Why? Wrong pricing, rising cost of goods, too many overheads, poor cash management, and of course, unrecorded expenses. Your profit margin tells you whether your business model is working or needs a reset. Checkpoint number 4, cash flow evaluation. Cash flow is the silent killer before the new year ends. You need to check, were there periods when you struggled to fund operations? Did you rely too much on credit or loans? Were customers delaying payments? Did you mix personal and business money? You need to understand not just how much you earned, but how money moved. That's what determines stability. Let's look at checkpoint number 5, debt and payment obligations. List all the money you owe: suppliers, tax authorities, staff, or loan providers. Then list money people owe you. Some businesses enter the new year with debts they didn't even track. This is how penalties blocked accounts and broken relationships happen. Clear what you can, plan for what you can't. Then let's look at checkpoint number 6. Checkpoint number 6, tax compliance status. Before the new year comes, check your tax obligations: company income tax, personal income tax, value added tax, your pay as you earn for your staff, and of course withholding tax. And you need to check whether you have filed all annual returns. If something is pending, fix it now. Year end is the worst time to discover tax issues because penalties stack up quickly. Let's look at checkpoint number 7, record keeping and books review. This is where most SMEs feel the pain. If your records are incomplete or scattered, you can't plan, you can't file taxes, you can't apply for funding, you can't track profitability, you can't make confident decisions. Doing a year-end cleanup properly, that is by capturing receipts, updating bank statements, reviewing ledgers, gives you a clean state for the new year. Let me just, before I round up, I want to just mention this as a bonus: how to prepare for a strong new year. How do you prepare as a small business owner or a medium business owner for a strong new year? Once you've reviewed everything, take these steps. Number 1, set revenue targets based on what actually worked. Build a realistic budget for expenses. Adjust your pricing if your margins are weak. Create a cash flow plan for the first quarter. Identify the top 3 financial habits you must build. Set up proper bookkeeping. Both do you want to use internal? You want to do it yourself? You want to employ an accountant? Or you want to outsource? Decide which tools or system you will use to stay organized. Well, if this video has been very, very insightful to you, please share it to to all other businessmen and women like you and entrepreneurs that are within your community, within your sphere. And also, please like it. Like it. And of course, I'm expecting your questions, your contributions at the comment section. If probably you have been doing this yearly, let's hear your experience. Share your experience with us. In closing, I want you to know that reflection is powerful. It helps you correct mistakes, repeat your wins, and enter the new year with confidence. If you need support with year-end cleanup, bookkeeping, or tax compliance, reach out to us. And this is the best time to fix your numbers before January gets busy. Thanks for joining us, and I look forward to see you in our next video. Peace and God bless.